Divi Slabs surges on the back of a strong recovery in numbers for the fourth quarter. Margins recover to more than 30% after 5 quarters. Brokerage firm Jefferies raises the stock price or target price to the stock at around 4,050 rupees. The stock higher by about 3%.
Bosch climbs after delivering its quarter 4 numbers as margins sustain over 13% for the second straight quarter despite low single-digit top-line growth. The stock is up close to 100%. It's come off a couple of percentage points from the high point of the day.
Torrent Pharma's fourth quarter numbers come in largely in line with estimates. The company also plans to take shareholders' approval for raising up to 5,000 crore rupees at the annual general meeting. The stock jumps nearly 3%.
Glenmark Pharma surges more than 7% as margins expand over 300 basis points. The management also guided for double-digit profit growth in FY25.
RVNL climbs nearly 5%, up around 3.5% now after being declared as the lowest bidder for a Nagpur metro order worth nearly 187 crore rupees.
Hello and welcome to Chartbusters. I'm Nigel D'Souza. Joining me as always is Mangalam Malu. Well, on the top of the screen, it's telling you the picture. We have green on the screen, but it's quite a bit of volatility is what we have seen. At one point of time, the Nifty went into the red as well. The breadth of the market actually has more number of stocks declining than advancing. But Mangalam, I guess we've got 5 sessions before we get the election outcome. We'll get the exit polls over this weekend as well. So brace yourself for some bit of volatility, but the markets are pricing in continuity and a third term for our Prime Minister, Mr. Narendra Modi.
Absolutely, Nigel. You know, the market's pricing in continuity, notwithstanding the volatility, which is reflected in the kind of VIX up move that we've seen this morning as well. So the India VIX is closing in on that 23 mark. It's a up move of nearly 5%, and this despite the sort of move that we've seen in the markets where volatility, or rather continuity is being priced in through this volatility. Watch out for a couple of these stocks. We have the Nifty Bank, which is now just about 600 points or so away from a fresh record high, and also 700 points away from the 50,000 mark. So now that we're used to life above 23,000 for the Nifty, can we go ahead and touch that 50,000 mark on the Nifty Bank is the big question. And the answer to that would lie in how HDFC Bank performs, because this morning it's done okay-ishly well, up around 1.5%. But importantly, at 1535 rupees, it is also above the 200-day moving average, a mark that it did not conquer last week. And it had conquered all the important moving averages last week. So let's see where this one goes from here. But as we're talking about the markets and the expected volatility going ahead, let's welcome Shivangi Sarda of Motilal Oswal joining in for a quick technical check on the market as well. Shivangi, it was a big move that we saw last week. The question is, does it continue this week?
Good morning, Mangalam and Nigel. Thank you for having me. So we have seen that there has been such spectacular, move by the bulls, and the put writers have created a strong base at these levels as the put call ratio is consistently hovering, above 1. And of course, we are heading into the monthly expiry week and an event ahead. So volatility is going to be at its higher levels, and we need to be very cautious with the stop losses as well for option trading. Now, talking about the levels per se, technically we've seen from the last 10 sessions consistently we've been making higher highs, and on the weekly basis we've given a 15-week consolidation breakout for Nifty. So technically and derivatives data both suggest that there will be a good up move over here. We are expecting 23,350 next on the Nifty index with a support of 22,850 levels. Now, talking about the Bank Nifty, we are seeing some of the heavyweight private banking counters are supporting the index, and the index has outperformed from the last 2 sessions after a long underperformance of the 7-8 odd sessions. So clearly momentum is seen over here as well. It's trading above its key exponential moving averages as well. Now we are expecting next 49,750 over here with a support of 49,000 zone.
Okay, all right. Thanks a lot, Shivangi, for joining in and giving us your trade on the index. But also, could you fill us in with a couple of trading strategies today? And I also wanted to ask you about Ashok Leyland. What's the view out there? That one's bursting away in today's session.
Of course, the entire auto pack is in action, and on my radar is also one of the stocks from the auto pack. But let's talk about Ashok Leyland. Here, we've seen that consistently from the last 25 odd trading sessions, the supports are gradually shifting higher. And month-on-month basis, we've seen that stock has outperformed in the last 2 months. One of the strongest counters in the auto pack, and we are expecting this up move to continue. The good part is that it is halted at these levels and then showing a good up move. So we are expecting 230 as an immediate target over here, and then eventually 250 for this stock. Now, on my radar is also Exide Industries. This stock has shown, strength from the last 27 trading sessions and respected its support zones, moving in an parallel channel over here. And a good part is 30% open interest addition have been seen in this series so far. So over and above, the stock is looking quite positive, and a tailwind from the sector will also be visible. And we are expecting the stock to touch 500 levels with a stop of 475. The second pick on my radar is Indian Hotel. We've seen that this stock is also now started to show momentum, and the stock has recently come out of its 50 daily exponential moving average with good amount of volumes over here. Interestingly, short covering move can be seen in this series, and we've seen that the IVs of this stock has dropped and now increasing again, which clearly shows that momentum is just going to start in this counter. So we are recommending a buy over here as well. The next targets for this stock is 610 with a support of 570 levels.
Right, Shivangi, thank you so much for joining in and giving us your views on stocks and the indices on the whole. Thank you for joining. Always a pleasure speaking to you. Take a short break, actually. Before we do that, let's get you some ideas for profit coming in from our colleagues at Money Control Pro. And today we have Anubhav Sahu joining in with a stock that he's been tracking.
We are looking at Zydus Life Sciences, which posted a strong performance in Q4, driven by international markets. Since our record 6 months back, the stock has nearly doubled. While we are aware of the transitional opportunity due to Revlimid, we believe there is some merit in tracking the underlying businesses in the US and in India. Further, what adds to the growth optionality is the progress in new chemical entities. It is noteworthy that with respect to Snowflast, company has received US FDA approval to initiate phase 2 clinical trials for Parkinson's disease. Coming to fiscal 25, US market is expected to witness growth in high teens, backed by traction for transdermals, peptides, and niche products like Mirabegron. Domestic formulation is also expected to do well on the back of nephrology, oncology, and derma. Biosimilars should also scale up from the current portfolio of 30 products. That said, growth in the consumer healthcare segment can be a key differentiator, which is also a function of rural recovery. Now, with respect to margins, we expect some moderation over the medium term as the gains from Revlimid wanes. While the stock is not inexpensive, a business on the pharma innovation side can help it further re-rate.
Right, Anubhav. With that, we'll take a short break, and on the other side, we'll have Gnanesh Gala, who's the Managing Director of Navneet Education, joining in to discuss the quarter that went by.
Welcome back. Well, let's get straight to the management as promised. Navneet Education, that's the stock on our radar. Well, the last year was a fairly volatile one, but to understand what's the way ahead, we're joined by Mr. Gala, who's the Managing Director of the company. I'm Mr. Gala, good morning, and thanks a lot for joining in. Well, give us a couple of details then. For FY25, what can you guide us on your publishing side of the business, your stationery side, and if you could break it up for us, what is the growth you're estimating for domestic and export business? Please go ahead, sir.
Yeah, sure, Nigel. As far as publishing business is concerned, as you know, we are into state curriculum business, where the curriculum change is very key growth driver for us. For last 6 years, that has not really we have not seen any syllabus change in curriculum. And for FY24-25 also, we are not seeing any curriculum change. And therefore, we may have a very low single-digit growth in publications. With respect to stationery, and I'll first speak about the domestic stationery. Domestic stationery should grow between 12 and 15% a year, and that is with the introduction of several new category of products that we have decided to come with. And recently, because paper prices are quite stable, it becomes very easy for us to penetrate. As far as exports are concerned, the lost business last year will come back this year. And again, in exports, we are very sure of growing 12 to 15%. So that's the breakup for the businesses that we are in.
All right, 12 to 15% growth for your stationery business, split equally between export and domestic in terms of growth. Publishing would be low single digit. You know, the thing that stood out apart from your numbers was this announcement that you did. Navneet Learning LLP, of which NEL holds about 93%, will sell about 5.12% stake to Venturi Partners for about 225 crores. That values the business at close to around 4,500 crore rupees. So I just wanted to know that for you, what will be the net proceeds that will come ex of taxes? What will be the usage of those funds? I mean, is there a possibility of a dividend? And are you also looking at some further stake sale after, realizing this value of 4,500 crores for this subsidiary?
So as far as the current proceeds are concerned, most of it will be utilized or plowed back in the business, majorly for stationery business. We are seeing long-term growth opportunity in stationery, and therefore continuously from this year itself, we are going to invest money not only in land and building, but also in plant and machinery, because we are coming out with various category of products as well. As far as the future sale, nothing is certain right now. The company is doing exceedingly well, and therefore we would like to see the right opportunity to sell this stake.
So I didn't get the net proceeds that will come to you. 225 crore is the gross, money that you are selling it at. What would be the ex of tax and ex of expenses net proceeds that will come to you?
I believe around 200 crore we will receive in Navneet.
Okay. All right. Mr. Gala, just to confirm a couple of more details, since you said that you're going to be plowing it back into your business, I'm going through the list of details that you'll have put out. And the stationery business, I believe for building, you'll be spending approximately 90 crores, right? In the next 2 years? Okay.
Nigel, 1 minute. 90 crore would be invested in land and building, and around similar number in plant and machinery as well.
Right. So 110 crores approximately in the machinery part of your business. And on the machinery part of your business, you'll get an asset turn, right? So what would the asset turn be on this 100 crores that you're going to be putting in machinery?
So minimum 3 to 4 times asset turn in next 3 years. But when we utilize 100%, it may further increase to around 4.5 times.
Okay, so approximately 300 to around 450 crores is what you can get from this, right?
That's right.
Just one more aspect I wanted to focus on. You've given us the domestic growth, of 12 to 15%. There's scope to improve margins as well?
Yeah, at least 150 basis increment also we are seeing. And the reason I said the paper prices are quite stable, therefore in this scenario, we always gain to benefit.
Okay, so what should the blended margin look like then, sir? For the last year, if I look at it, the blended margin was around 17%. You're saying for your domestic stationery business, that's a 100 basis points improvement. So for the coming year, what will your EBITDA margins look like?
I think we need to split the margins between publishing and stationery. So stationery blended margin, which was around 12%, which is likely to grow to 13.5% this year. And the publishing business, which we have been seeing around 33-34% margin, that is likely to keep the same. Only I should clarify here that after the merger of our EdTech activity, there will be reduction in publishing market. At a blended level, it was always reduced, but at a standalone, earlier we used to see 33% margin, which will come down because of the EdTech activities that we are doing. So on the EdTech, it should be around 30-odd%.
All right, so 30% in the publishing business, and you're talking about 13% in the stationery business on a blended basis, right?
That's right.
Okay. What about, the EdTech business itself? You've been talking about growth here. Over the next 2 to 3 years, what could it be in terms of an overall proportion of your revenues? And when does it break even on an EBITDA front?
So I should now would rather prefer not to separate the digital business and physical print business, because both activities are going hand in hand. They are blended in many, many ways. So now it is impossible to segregate the business of EdTech. Finally, each and every book will have a technology aspect in it. And whereas in terms of sales, wherever we end up selling physical books, the same schools are buying the technology and vice versa. So in fact, now going forward, we'll be showing a single business of publishing or content business.
Just to clarify, EdTech last year was around a 45 crores loss, right?
That's right.
And that will come down this year?
Yeah, that should come down. If we purely see individually, then it will come down to around 30 odd crore this year.
30 crores. Okay, all right. And do you think by FY26 it can break even?
Yeah, we are very confident of.
All right. Since we're talking about syllabus change as well at the start of this conversation, I believe the syllabus change has come for grades 3 as well as 6. Could you clarify on that? And when do you expect the syllabus change to come for the remaining grades?
So grade 3 and 6 change happened in CBSE segment, where we have very marginal revenue in CBSE segment. Okay. The major business that we are in is for Maharashtra and Gujarat supplementary book business, where in Maharashtra and Gujarat there is no curriculum change even in FY24-25, and therefore I said a lower single digit. But now it is very clear that FY25 onwards, FY25-26 onwards, there will be continuous change in curriculum for at least 4 years.
All right, FY26. So were that to happen, say FY26, you could expect low single digit or low teens sort of growth in your publishing business, or would that be more than that?
It would be more than that. Of course, it again depends on the grade or the standard that gets changed. But normally, lower standard change brings in at least 8 to 10% growth, and higher standard brings in between 15 and 20% growth.
All right, take that point. So we'll wish you good luck, and for the students, of course, hoping that curriculum changes don't happen. But for you, curriculum changes would be good if they happen FY26 onwards. Yeah. For now, FY25, no problems in terms of students when it comes to curriculum changes.
Mr. Gala, every time me and Mangalam see you on the television, we think back of our days. Navneet Education, it takes us back a few years, actually quite a few years. But always good to see you, sir, and wish you well for the coming year. We'll hold you at these numbers, and we look forward to chatting up with you at the end of this fiscal.
Thank you, both of you.
Well, for the time being, let's slip into a short break, come back, continue focus on markets. Don't go anywhere.
Cochin Shipyard is the stock which is buzzing in trade after reporting a strong set of numbers in the fourth quarter. Upasana joins in with the details on that one. Over the last few days, we've seen a big move in all of these shipbuilding companies. Upasana, what's about Cochin Shipyard?
The company reported a strong set of numbers in Q4 FY24. Revenue stood at 1,286 crores versus 600 crores on a YoY basis. EBITDA stood at 288 crores versus the EBITDA loss of 68 crores on a YoY basis, while the margins for the current quarter stood at 22.8% and PAT stood at 259 crores versus 39.3 crores on a YoY basis. It is important to note that there was an exceptional item worth 64 crores in Q4 FY23. Now coming to the segments of the company, the shipbuilding, the revenue saw a sharp uptick from 454 crores to 985 crores, and PBIT also stood at 173 crores versus a loss of 88 crores on a YoY basis. Now coming to ship repair, the revenue stood at 301 crore with an uptick of almost 1.06 times on a YoY basis, and margins also expanded sharply from 14.4% to almost as high as 44% on a YoY basis. So all in all, we are seeing a strong set of numbers coming in from Cochin Shipyard in its Q4 FY24.
Well, indeed, Cochin Shipyard reacting positively to the set of numbers. Thanks a lot for that, Upasana. Well, let's focus on Hindalco. They as well reported a rather good set of numbers. The total India business plus the copper business, put it together, it beat estimates. Earlier today, we spoke to Mr. Satish Pai, the managing director of the company, and discussed the current trends in the commodity prices and also the outlook going forward. Let's hear out what he had to tell us.
In the last couple of weeks, the aluminium prices have spiked up, but they've been fairly volatile. There have been sort of $100 swings each way, currently running at $25.50. I think that, we are sort of working with the fact that the numbers are going to be a little bit more stable around 2,400 rather than the current 2,550 or 2,600. I think our input cost, especially coal cost, there's enough coal available. So I think our cost of production in Q1 is probably going to be a couple of percentage points even lower than Q4. So I think that the EBITDA per ton in Q1 will be certainly higher than the Q4 $967 per ton. So I think Q4 was a little bit exceptional for copper in many ways. The demand for copper rod was very high. If you look at it, we had a record sales of 135 KT of copper. So combined with high LME, that gives us a better margin. I think Q4 was very exceptional. But that being said, the Indian demand for copper is very high. So we think going forward, the 600 crore type of EBITDA range should become the new normal.
All right, that was about Hindalco. But let's also talk about Ashok Leyland. That stock's doing extremely well this morning. In fact, it's up at the high point of trade. Shares are surging. The margins beat estimate. The fourth quarter outgoing CFO Gopal Mahadevan told CNBC-TV18 along with the MD and CEO Shenu Agarwal to discuss the outlook for the company. We asked about the strategic role that he'll be taking up as he steps down as CFO and transitions to the new role. So he defined what he'll be doing. Let's hear them out.
But if you exclude that 3-4 month period, you will see that April, October, the industry was growing very well. And even in April this year, now in FY25, the industry has grown by 10%. So, based on that, we do believe that FY24 actually was an excellent year. And we also think that that momentum will now carry forward to FY25 also.
My role would be focusing more on strategic financing and M&A, because I think that these are very important things that the company is now looking at to transform itself into a global top 10. I think, this role is going to be, more, as I mentioned to you, on strategic financing, M&A, and I would also have, to be involved a little more on the subsidiaries itself. Ashok Leyland has a lot of subsidiaries which are today, on value generation mode. So this is another part of my role where I would be interfacing with the management of these companies to look at opportunities for value enrichment. At the moment, it's a little too early for me to state what the specific M&As would be. As and when they happen, you will certainly come to know of them.
Right, that was the management of Ashok Leyland. But with that, we're out of time on this edition of Chartbusters. Thank you so much for watching. And as we take your leave, here's a quick note for all our viewers. A daily wrap of the top headlines will hit your inbox before you call it a night. And that's the CNBC-TV18's newest offering, the CNBC-TV18 Daily Newsletter on LinkedIn, featuring the top 10 stories on markets, corporate updates, economic insights, and financial highlights. So subscribe now and get the CNBC-TV18 edge.